Hello, everybody. Welcome to another episode of Silicon Valley Real Estate Advice with Stephen Smith. Again, I have Monique Stanford here, who is an absolutely amazing mortgage broker, probably one of the best in the business that I've ever seen. And today she's going to talk a little bit about appraisals. So listen up. This is good stuff.
Okay, so big hot topic here. You know, everyone's talking about property values and they just keep going up higher and higher and higher. And what we're seeing is some appraisals actually come in lower than what people have agreed upon on that purchase contract, right?
Right.
So for easy numbers, let's just say your buyer purchases a property for $1 million, they're putting 20% down.
Mm-hmm.
And that appraisal comes in below the $1 million. Your lender is going to lend based on the appraised value or the purchase price, whichever one is basically lower, right? So if the appraisal comes in lower, then that 80% is based on the new appraised value. So if it appraises for 900, they're gonna lend you 80% of 900, right? The good thing is that it's important to understand that there are many instances where your lender might lend 82% of the appraised value, 85% of the appraised value, even 90% of the appraised value. And what does that mean? That means that your buyer does not have to come in with additional funds, okay? So what's important to understand is what's your loan amount. If you're at a conforming loan amount, and in the Bay Area, we're in a very high cost county, right?
Yes.
So those conforming loan amounts are closer to what, 970, 800, okay? 970, 800. And so if you have a loan amount that is around that price, basically your borrower can go up to a 95% loan to value in many instances. Now, it depends on who your lender is. It depends on if you're going direct to a bank. Sometimes you'll see a lot more restrictions there versus going to a mortgage broker or correspondent lender, someone like myself, where we have a lot more flexibility. So again, this is, people think they automatically have to come in with the additional funds. That is not something that automatically happens. The other thing is, in the Bay Area, we're seeing big down payments. Right. So a lot of people will purchase a house for $1 million and put $500,000 down.
Correct.
Right?
Yep.
And it seems kind of insane to some people out there, I'm sure. And it seems insane to me too.
It seems insane to me, but it's very common out here in the Bay Area.
It is absolutely very common. And so how does it affect those borrowers who are putting already their loan to value is only 50%, right? So they're purchasing at $1 million, their loan amount's 500, their loan to value is 50%, that appraisal comes in low, so guess what? Instead of 50%, their loan to value might be 55, 60, 65%. So what does that mean? That means that they'll still get the same rate in most circumstances. They, again, don't have to come in with additional funds. But I guess the takeaway when it comes to this is don't be too alarmed. I say have that conversation with your realtor, have that conversation with your loan officer on the what ifs, because once you're better prepared and you know the what ifs, then it's not such a big shock if that appraisal comes in low.
Okay, Monique, for our viewers out there, what are the key takeaways from this discussion regarding appraisals?
That's a great question, Steve, and I think the takeaways are twofold. So one is find out from your lender what is the maximum loan to value for the products that they're offering. You know, could it go up over 80%? Could it go to 85, 90%? And what kind of costs are involved in that if that did happen, so that you don't have to put more money down. So that's the first discussion, is with your lender. Maximum loan to value, what is the maximum loan to value? And then the other takeaway would be making sure that you're having that conversation with your realtor regarding what could this property appraise for? Can you discuss and ask for those comps to support the amount you're actually writing? Because bottom line is, people are writing way above list, and there may not be comps that are going to support that, and that may be okay. But the main thing is having that discussion and knowing the what ifs and being prepared.
Okay, fantastic. Really great advice. Again, I strongly encourage you to reach out to Monique with Home Bridge Lending Services. Again, she is a mortgage broker extraordinaire, and the contact information will be here for you. And reach out to her. Also reach out to me if you are interested in buying or selling in the Silicon Valley or San Francisco Bay Area. I'll be sure to help get you the highest possible price for your house or get you the best possible price of your buying. Thanks again for watching. We'll see you next time.
Bye-bye.
Bye.